Walk into a bank with $500 in your account. Then walk in with $500,000. Same building, same logo on the wall, completely different experience. And most people have no idea just how different, because most people have only ever been on one side of that door. Today we're pulling back the curtain on exactly how banks see you, speak to you, and serve you depending on how much money you have. And what you're about to learn is going to change how you look at every bank branch you've ever walked into. Stay with me, because this goes much deeper than customer service. Let's start at the bottom. You have a basic checking account, maybe a few $100s, maybe a few thousand. You are, in banking language, a mass market customer, and the bank's relationship with you is almost entirely automated. The ATM is your banker. The app is your branch. The hold music is your relationship manager. When something goes wrong, a fee you didn't expect, a hold on your paycheck, an overdraft charge, you call a number, wait 20 minutes, and speak to someone reading from a script who has no authority to actually help you. You are not a client. You are a transaction volume. Here's something wild. Banks actually lose money on many basic account holders. The cost of maintaining your account, the infrastructure, the insurance, the compliance, often exceeds what they earn from you. So they make it back through fees. Overdraft fees, monthly maintenance fees, out-of-network ATM fees. You're not their customer. In many ways, you're their product. Now move up. You have $50,000 to $250,000 in deposits or investments. You've crossed into what banks call the mass affluent segment. Things start to change. You get a dedicated phone line, shorter hold times, a human being who actually knows your name. Occasionally, you might qualify for a relationship banker, someone assigned to your account who can waive a fee, flag a better rate, nudge you toward the right product. The bank is starting to see you as someone worth keeping, not because they like you, because your money costs them less to service than it earns them in return. But here's where it gets really interesting. Cross $250,000 in investable assets, and you enter private banking territory. The experience transforms completely. You're no longer walking into a branch. You're being invited to an office. Someone calls you. You don't call them. Your banker knows your kids' names. They remember your goals from 6 months ago. They proactively move your money before you even think to ask. Fees get waived without you requesting it. Products unavailable to the general public suddenly become available to you. Better interest rates, early access to investments, tax optimization strategies that nobody mentioned when you had $500. And here's the kicker. The bank isn't doing this out of generosity. Every dollar of personalized service they give you is engineered to deepen your dependency and increase your assets under their management. The warmth is real. The math behind it is cold. Now here's what nobody talks about. The gap between how banks treat the bottom and the top isn't just a service gap. It's a knowledge gap. Wealthy clients get told things that regular clients simply aren't told. Better saving structures, legal tax strategies, investment vehicles that don't get advertised. The information asymmetry compounds over time, meaning the rich don't just get better service, they get better outcomes because they're working with better information. And the people at the bottom, paying fees they were never warned about, fall further behind not because they're less capable, but because nobody at the bank was ever incentivized to tell them the truth. So here's the real question. Is this the bank's fault? Or is it just business? The answer is probably both. Banks are businesses. They optimize for profit. And profit follows wealth. But understanding the system is the first step to navigating it on your own terms. Because the moment you understand how you're being seen, you can start making decisions that change what category you're in. You don't need $500,000 to start being treated like your money matters. You need to know what to ask for. And now you do. Drop a comment. Have you ever noticed the difference in how a bank treated you? Subscribe for more content that pulls back the curtain on money systems most people never question. Next video is already there. Click it.